What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Thursday, March 16th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. How you doing today, my man?
It's a beautiful day in the neighborhood and way busy, which is a good thing.
Way busy, conveniently not banked at Credit Suisse.
Oh, heck no. That's you.
Have you I'm interested. We're gonna definitely get a bank segment coming up, and I'm interested what Stu Turley's doing. Are you buying all gold now?
Ammo.
Ammo. That's the new currency. I can see you stacking hard. I love that, guys. You have a great show for us lined up, Stu. You've picked out some absolutely banger articles. First one we're going to cover, Biden's 30% crypto electricity tax may be too blunt of a solution. He will cover what's pending. I assume this is in his latest budget, which it is. So Stu will cover what that means for the crypto markets next. Kevin O'Leary says avoid bank stocks and buy energy instead. Here are two names to consider. Without looking at them, I'm going to not consider them, if only because he was the face of FTX advertising. But we'll see what he has to say and which companies we should be shorting. Stu will cover that one. Next, UK to class nuclear as environmentally sustainable. This is a great move. UK's Chancellor Jeremy Hunt is going to announce some great things. Stu will cover what is going on in the UK next. The IEA Global oil demand will outstrip supply in late 2023. On the day oil drops 5 percentage points, the IEA decides to drop their global oil demand model, which, as you see in the title, will outstrip supply in late 2023. Stu will cover all the details. And then finally, to the greatest state in America, Colorado. Looks like high energy costs are now part of a regulatory game. It is really sad what's going on there. Stu will cover what's going on in that beloved state. He'll kick it over to me. I will cover really just a brutal day in the oil and gas markets. What's going on in the banking industry is having a kind of a fallout effect, specifically in the oil markets. We're down 5 percentage points, slightly worse than expected. EIA crude oil build. On that side, natural gas still 248, so there's not much choppiness there. I will cover all that and a bag of chips, guys. But first, check us out. World's greatest website, EnergyNewsBeat.com. Look at the description below. All of the articles we're about to cover are via that website. It's, again, the best place for all of your energy news. Dashboard.EnergyNewsBeat.com. We are hard at work at V2 to deliver data and news to you in a convenient format. I'm out of breath, though, Stu. Where do you want to begin?
Let's start with my buddy Biden on Biden's 30% crypto electricity tax may be too blunt of a solution. All right. I'm interviewing a very nice guy tomorrow on Bitcoin. So it's going to be a good educational thing for me. ESG Bitcoin. So this will help. In his latest budget for fiscal year, first paragraph, fiscal year 2024, President Biden has proposed new tax on electricity use from cryptocurrency mining. If the budget becomes law, a 30% tax will be phased in over 3 years. The proposal aims to address the growing concern about the environmental impact of cryptocurrency. All right. Hey, where most of the crypto miners are going is they're looking for trapped natural gas. They're looking to get off the grid. And if they can find where trapped natural gas means where they cannot export it out on a pipeline. And there's a bunch of places where you've got a lot of natural gas or flared wells or those things in areas, and use that for low cost energy. Every Bitcoin mining fund or people I have talked to are looking for that low cost kilowatt per hour. It can be hydro, it can be anything. So the high cost of energy and the ESG movement in Bitcoin is already there without taxation. This is just another way of trying to get more revenue coming in, and all it will do is drive Bitcoin mining underground, if you want my honest opinion.
Well, because, they got to get their grubby little hands on it. You know what I mean? We got to tax it, baby. We're not going to let it go untaxed. You don't think there's a way to weasel around and for us to be able to, the federal government to be able to get their take? Here's what I think. I think that it's clear when they don't like something, they brand it as non-clean. When they don't like something, oh, it's emissions based. You're creating emissions. Because if what you're saying is true, Stu, that the primary use case for crypto mining is to capture flare gas, which would normally be flared into the atmosphere and release CO2, the very thing that causes climate change, which the federal administration is then taxing people to do that. Now, I get what they're saying. They're going after people who are plugging into a wall, but how do you even know that? I mean, this is just where they're throwing things in the budget to virtue signal to their base. Hey, look at us. We're on your side. They'd never implement this.
You never know what stupidity lurks in the mind of a politician.
What's next, Stu, before I go crazy?
All right. Kevin O'Leary says avoid bank stocks and buy energy instead. Here's 2 names to consider. I saw him interviewed, I think it was MSNBC the other day on this, and he said, hey, I lost a couple billion in what's a couple billion between friends in SVB. So I'm I ain't got a couple billion to lose yet. And when you sit back and kind of go, if you thought about putting, this is a quote, if you thought about putting your money into bank stocks was a good idea, says O'Leary, you should change your mind this morning forever. So, Marathon Petroleum, here's where I do agree with him. Marathon has got good management, good numbers. And here is a quote: strong FCF generation, cash balance, and distributions from MPLX gives us confidence in MPC's Marathon Petroleum Corporation ability to return capital to shareholders through the cycle. This is the group that is the downstream or refining group, and they are a great group and a good investment for long term. So yeah. I agree with that. There's
down 4 percentage points today. Great call.
One day does not make a pattern.
I'm mostly yanking Kevin O'Leary's chain. This dude's been on the wrong side of 2 recent historic collapses. One, he's the spokesperson of FTX. We can't forget that. I'm not just going to gloss over the fact that this dude was basically shilling for FTX and Sam Bankman-Fried. And now he's exposed to Silicon Valley Bank. I mean, what's next, Stu? What's next?
Well, I'll tell you.
Shark Tank's a Ponzi scheme?
He's richer than I am.
I know. I'm just yanking his chain. He's smart. It is just funny that, he's telling us which stocks to buy. Maybe it's the time to just relax and go enjoy your yacht. Don't need to be pitch me stocks now.
There you go. But MPC is rated as a strong buy. And then you have to take a look at the other one.
Well, his next one's Targa Resources, largest independent midstream player. I will admit this, he has something correct. He's identified the midstream and the refining space as where the long-term value is. He's got that right exactly, because that's where, if you're an investor looking for a stable dividend, that's the difference. Dividends happen in the oil and gas upstream sector all the time, but they're variable. They're all over the place. You don't know what it's going to be. Right. They sometimes don't give one. They sometimes do. Midstream, while maybe it only yields, in Marathon's case, 2.4 percentage points and a 1.94 on Targa, that's very consistent. and you can really target that. So if he's done one thing correctly, he's identified two sectors that if you're just looking for disciplined yield, if you're yield hunting, as we call it in the business, they're good buys. So I'll give him credit where credit's due. It's just fun to yank his chain.
Oh, it is. And yes, just fun to yank his chain. Let's go to the next one here. Okay, the UK is in trouble. Let's just start with the UK. UK to class nuclear as environmentally sustainable. And this is actually huge. And I'll go through that here in a second. First paragraph, the UK's Chancellor, Jeremy Hunt, has announced that nuclear will, subject to consultation, be classed as environmentally sustainable in our green taxonomy. He also launched competition to be completed at the end of the year, which could lead to co-funding for small modular reactors, SMRs. This is huge. The whole world is looking at SMRs, small modular reactors. They're easier to build, easier to get funded. And if they're like Copenhagen Atomics, they can be built on a factory line and shipped out. And you got better controls, even, union labor, whatever you want to say, you got controls over something like that. I think that's fabulous. Now, Scotland is producing most of the oil for the UK. Scotland is shutting down their oil and natural gas. They also import a bunch out of Norway and other areas. So you sit here and take a look, and then they have the North Sea up there, and they're shutting down the North Sea from the UK's perspective. So the UK is actually a bunch of dopes running around like off the cliffs of Dover, a bunch of lemmings running off into the ocean. This was a smart move, and it was about the only move that they had.
Hey, I mean, I'll take it. I think this is better than pouring into some stupid offshore wind farm. So, as much as I joked about we're just supplying everybody with nukes now, it's unfortunately it's the cleanest way to go forward. So we got to figure it out. And these small modular reactors, these SMRs, as you've talked about, and I highly recommend going and listening to some of the interviews that Stu has previously done on this podcast. Just go look at the feed, scroll down, you'll find who's the top nuclear guy you've interviewed. They need to go listen to. What's the one?
I'll tell you, the CEO of Copenhagen Atomics. I mean, he's a cool cat.
That was Tom Jensen?
Yes.
Yes, Tom Jensen.
I learned a lot from him, and I'm going to reach out to him and find out, because I believe that they've already fired up their thorium reactor, and it uses nuclear waste in order to do it.
I like it. All right, what's next?
Let's talk about one of the most fun organizations on the planet. The IEA Global oil demand will outstrip supply in late 2023. I put the IEA in the same category as the WHO, the World Health Organization, as well as the UN, and then the International Monetary Fund. I put all of these guys into the same bucket of squirreldom. I think that, have you ever seen any of those buckets, Michael, where you have a trap, you have a Lowe's bucket, and then you have a ramp that goes up with the rats that jump in, and then there's a lid that flips. I wish we would put that right there and tell them there's green money at the bottom of them and let them all run up into that trap. I do not like any of them. All right, let's go on here. The IEA, thanks for letting me rant, by the way, Michael.
Yeah,
The
I'm
IEA expects oil markets to swing from a surplus of the first half of 2023 in a deficit in the latter part of 2023. China's recovery is expected to drive global oil demand to record highs, with oil demand hitting 102 million barrels a day. That's up quite a bit. I mean, I believe that's up almost just shy of 2 million barrels a day. That's up.
No,
So
it is up. I think they also point out that instead of a 710,000 barrel per day increase of growth in the first quarter, we might see 2.6 million barrels per day in that fourth quarter, which is pretty insane. They also expect between Q1 of 2023 and Q4 of 2023, the global oil demand is set to surge by 3.2 million barrels per day, taking average growth for the year to 2 million barrels today. Global oil demand is set to reach a record 102 million, as you mentioned, Stu. So, on the day that oil prices dropped all the way down to $66, currently sitting at $68, IEA comes out. Again, they're putting this all on China, so whether or not you buy it or not, that's what they're saying.
two things. Russia will only be able to get back to pre-pandemic levels barely, even with all of their production and all of their removal to the dark fleet and the gray fleet, which we've covered on other podcasts. Russia's being taken out of the mix from the global mix.
Yep.
So let's take a look at you and I were kind of laughing. You had to fact check me on Delta yesterday. And I was looking at some of the other airlines, and airline traffic is going up, which is going to help the marathons of the world, the downstream players. So we do have a lot of things going on, but the financial crisis, I think we don't know how bad it is yet.
Mm-hmm.
And I quite honestly think that there's some squirrels laying around out there that have yet to be uncovered. So
yeah, I can imagine. I think the IEA is wrong in this analysis? No. I do think what they're trying to do is they're shilling for Middle Eastern oil companies who want higher oil prices, and there's a tone to their report that is extremely bullish. You know what they want. As much as they want to go green, they know who pays their bills.
There's a couple new things that have developed out of the Middle East as well. One of them is Qatar bringing in several companies to do green hydrogen, which is just unbelievably, yeah, there you go. Now, here's the other thing about the IEA, and that is they're reporting, if you look at their funding comes from renewable or oil, and their reports match depending on the way the wind is blowing. Wait a minute. The wind is blowing this way. It's renewable. It's blowing this. It's oil. So, all right, let's go to the next one. And Colorado's high energy costs are part of a regulatory game. I saw this one, Michael, and I love me some Colorado. My kids were born in Colorado. I love Colorado, love skiing. The Mary Jane, in between Winter Park and Mary Jane. Mary Jane is just all black. I love Mary Jane. The Drunken Frenchman is the one run coming in there. You got moguls everywhere. I've done so many helicopters down that hill that it is so much fun. I've even screwed myself into the hill. I was doing some helicopters so bad. All right. Love Colorado. This is really sad. Colorado's first paragraph. Colorado's high energy costs are partly due to high stakes regulatory game, quote unquote, being played largely out of the public's view, he said, the official advocating for customers before the Colorado Public Utilities Commission. This is absolutely a tale-telling article, and I recommend everybody go out to energynewsbeat.com and take a look at this. Here's a quote that's pretty important. I would say if a rate payer is deciding between paying their heating bill or paying their prescriptions this month, then yes, something is wrong. Senate President Steve Finberg, Democrat out of Boulder, who chaired the hearing, something clearly needs to change. Well, yeah. Why don't we get all politicians out of office, Republican or Democrat? Let's go to down here. Here's where it says Piera says when they started the advocate office, he was introduced to the concept of the rule of 60. This one's critical. A utility comes in for a rate case, they're likely to get 60 to 70% of what they ask. And in my short period of 3 years, it's held very true. So, Michael, when you go in and you want something, you ask for 130%. And if you get 70% of that 130%, you're happy. You just inflate the numbers you need.
Yep.
All right. So guess what the consumers are getting?
Higher prices.
They're getting it in the drive-through, just like they always do. And so this is taxation through regulation at its finest. It's unbelievable how porculous the Democrat system, I mean, the Democrat and Republican system in Colorado is on the approval process of energy.
Yeah, I'm with you. I love that state, Stu. We could sit here and have a whole podcast talking about how much we probably both love that state. I was born there, went to college there, high school. I mean, I know that state just as well as you, Stu. I can picture you falling down Winter Park slopes as we speak. I can see you banging out those moguls. Stu actually was the one that found Winter Park all the way back on the Oregon Trail, so his legacy goes way back to that area. I mean, this isn't a problem. This isn't just a problem that's new to Colorado. It's a problem with any regulated system is when you go ask for rate increases. The problem is Xcel is a public utility, which means they have to get approval from the state Senate in order to set rates, AKA rate charges. So I think this, what's his name here? What's his name? The utility chief advocate. What's his name? This guy's name, the Colorado Utility Consumer Advocate Chief.
Yeah,
here it is. Joseph Perea. This is his guy. I think he's doing a great job. He's explaining how these regulators, and basically he says, quote, how the regulation compact between monopoly utility providers and state can affect the consumer's bill. Oh, yeah, duh. Yeah. As much as I love this state.
But the problem with Colorado is they have gotten most of their people imported in from California. They don't want to produce low cost energy, and they are absolutely shooting themselves in the consumer's foot. So,
oh, absolutely. I mean, unfortunately, the state is on a decline. There's a reason we don't live there anymore.
Yes.
Unfortunately.
Yep. It's back to you now, Michael.
Yeah, we'll keep it quick, guys. You've heard the news. Credit Suisse is down, but stocks were up today, though. I'm not going to opine on what's going on in the European banks other than it's affecting oil prices. We are down to $68.27 as we record this on the 15th here at about 6:45. We were all the way down to below $66, Stu, off the news of both that and a 1.6 million barrel crude oil inventory build. 1.2 million barrels was the API number, and that was what was expected. With dollar rising relative to other currencies, we saw crude oil tumble. Remember, they're inversely correlated. As the U.S. dollar gets stronger, oil gets weaker because it costs now more dollars to secure a barrel. Or your dollar can buy more barrels, so the price inherently drops. That's not good, especially as interest rates continue to rise with other currencies really, again, on the downtick. So everyone is pretty just concerned about what's going on in the banking sector, how this looks for a long-term commodities view. I don't know, guys. Again, I always thought this $100, Brent's current at $74. I mean, how does everybody feel about $100 Brent crudes, dude? Goldman Sachs is still on the phone with you trying to get you up. They've shifted focus from me and their nat gas analysts back to you. Sure up that oil desk because, man, they need some bulls over there now.
They can't afford me. And so, no, I still think it's going to be between 85 and 95 coming up real soon. And
you and the IEA.
98 sounds good. And I think there is one thing that is dependent, and that is how bad the financial global markets get. And you've heard me say for a long time that a global recession and depression in some countries has been coming for a long time.
And if that's the case, oil prices are going not to the moon, but to the floor. So your $100 oil price is not going to happen.
We'll see, because I think people are still going to print money because of stupidity, and then it's going to crash later on.
Okay. Well, we will see that. That's really all I've got, folks. I don't want to keep you too long here, if only because, you can go back to worrying about Credit Suisse and converting all of your cash into Bitcoin. So we'll let you go, guys. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, guys.